The biggest mistake I see people make when they shop for a mortgage is not understanding how to shop for a mortgage. If you're shopping for a car, it's not that complicated, right? You pick the 2 or 3 cars that you like the best, you compare the prices, and you say, which of these cars is going to meet my needs and what am I willing to pay for it? If you're shopping for a pair of jeans, you go to the store, you look at the colors, you go, oh, I like these 2 colors. You pick 2 different sizes, you go to the dressing room, you try them both on, you say, oh, this one makes me look really good. And then you purchase that pair of jeans. But you don't have that visual, aha moment when you're shopping for a mortgage. So most people don't really understand how to do it. They maybe call 2, 3, 4, 5 mortgage companies, and the only thing they really need to know, or they know to ask is, well, what's the best rate you can give me? And that's how they shop for a mortgage. Well, that's like picking a pair of jeans based on what size is available and not considering anything else. Yeah, you can do it, but are you going to pick the best pair of jeans for you? You probably are not. So if it's not that simple to shop for a mortgage, Michael, then how do I shop for a mortgage? Well, what you don't do is you don't start by looking for the absolute cheapest interest rates you can find. That's the wrong way to go about it, and I would tell you that whether I'm in the mortgage business, which I obviously am, or even if I wasn't, if I understood this. If the most important thing to you is the lowest rate, you open yourself up for a Pandora's box of problems with the actual processing of your mortgage. And it doesn't matter how low the rate is if your mortgage won't get approved and you'll lose the contract on your dream home. So don't start there. It's an important thing, and I'm not telling you it doesn't matter. What I'm telling you is start by finding reputable companies that you can work with. Identify the companies, and then if you want to look at rate, by all means look at rate. So how do you identify those companies? How do you say, I want to narrow this down to 2 to 5 mortgage companies that I know can do a good job of getting me to the closing table? Well, you can certainly take the companies that are top of mind, but you're just hearing their advertisements, and they're just trying to psychologically manipulate you into thinking they're the best mortgage company. So if you see them advertising on television, if you see them running radio or hear them running radio ads, if you see a big print ad in whatever media you like to take in, then just know that that company is spending a lot of money to try to earn your business. Well, what other way is there to earn my business? Well, I can earn your business through being referred to you as a competent, fair, ethical mortgage lender. And that typically comes in when you start talking to people about purchasing a home. Hey, mom and dad, I'm thinking about buying my first home. Or, hey, Susie, you're my next door neighbor, I'm renting, I want to buy, how did you go about buying your house? All these questions are things that you're going to ask people in your sphere of influence. And one of the questions you should ask them is, who was your mortgage company? Who was your loan officer? Now, I would caution you that if they can't tell you who it was, maybe that person didn't make enough of an impact to really be memorable. And maybe that's not somebody you want to work with. Or maybe they're not doing a good job following up with your neighbor and saying, hey, don't forget about us when you're ready to buy again, we're here to help. If they can remember the name of a person and they tell you that person did a great job, put them on the list. So if mom and dad say, hey, you need to talk to Weber Mortgage, put Weber Mortgage on the list. If next door neighbor Sally says, I used my bank, here's who I talked to, they did a great job, maybe put them on the list. If you want to search online for a mortgage company, don't search by rates, search by customer reviews and customer satisfaction. And don't look at the stats that are on the mortgage company's website. Look for a Consumer Reports or some type of reporting agency that can talk to you about reviews and how companies are rated. Now, you're not going to find Weber Mortgage on a Consumer Reviews article, right? You're going to have to look at our Google reviews. You're going to have to look at our listing on Google and see how many hundreds of Google reviews we have and that we're 4 point whatever stars. That's one way that you can go about looking for that recommendation Find the companies that you hear their names maybe advertised, but go to their online presence and look for unbiased third-party reviews telling you whether they did a good job. So that was a pretty good bit of time just telling you how to put that list together. My recommendation would be, don't start looking at 5 or more companies. It's going to be too much. It's going to be confusing. If you want to just pick one because they're highly recommended, well, we certainly hope that's Weber Mortgage, but it's okay to go maybe talk to 2 or 3. If mom and dad has someone, you also have this incredible resource if you're using a real estate agent. You have a realtor who has seen hopefully many transactions and can tell you when they've had difficult experiences with the lender and when they've had exceptional ones. So you can get referrals from your family member and friends. Maybe you get one from your real estate agent. And then the fact that you're watching these videos, hopefully you're calling Weber Mortgage because you see the value in what we bring. So now you've got it down to 2 or 3 different mortgage companies. How do I compare those mortgage offers? Well, first of all, a mortgage offer made when you don't have a contract is pretty much irrelevant. A mortgage loan officer could put any numbers on paper and present them to you, and if you're not under contract, those numbers will change. Not they can, they will change every day until you get a house under contract. So shopping rate when you don't have a contract isn't really valid. An unethical loan officer could quote you a really low rate that day, get you committed to them, stop talking to anybody else, then once you find the property, they just bump that rate up to a higher level where they put more money in their pocket. You just don't know. So have the conversations with those 2 or 3 companies, ask them probing questions, see how approachable they are, see how well they communicate, and see how good you feel about your ability to do business with them. But don't start looking at rates early. You want to look at rates once you have a contract. So if you're going to shop, get the contract and then get your estimates from your lenders on the same day, preferably as quickly as possible. So if you call Weber Mortgage at 8 a.m. on a Monday, we're probably going to have some numbers in your hand by lunchtime on Monday. If it takes somebody a day or 2 to get you a quote, it's probably not a company that you want to be working with. So if you got 2 different quotes from 2 different companies on Monday at 11 a.m., now what are you looking at? Well, it's not just the rate. The rate matters, but I want you to envision in your head the scales of justice, right? And in the scales of justice, you have a scale on this side and a scale on this side, and if you push down on this side, what happens to the other side? It goes up. So scales of justice, one side goes up, the other side goes down. If I quote you a higher rate, that's lower fees. If I quote you higher fees, that's lower rate. So I can manipulate either one of these numbers in a way that serves your best interest. So you got to compare both the lender fees and the interest rate on estimates given at the same time. If you do that, and you already know you're talking with reputable companies, then you can actually make a fair rate shopping comparison. But I will say this, you, if possible, should choose a local lender. It's going to matter to the agent who's advising the seller on which offer to accept. Because if they've worked with some big internet company before and had a bad experience, they're going to tell their seller, you got a variable over here you don't know. I know this local guy. I've worked with him dozens of times and he does a good job. So when you're shopping, make sure you consider local versus national because it's a consideration that the seller is also going to address. If you have questions about how to shop for a mortgage, I am more than happy to walk you through the process. I will even look at estimates with you side by side to help you understand the advantages and the disadvantages. Why would you do that, Michael? Well, I can tell you some of the best referral partners we've had are people who actually did their mortgage with a different company because it was a reputable company who at that particular time just happened to have a little bit better deal. When we advised them, if you feel confident with that person, their deal is financially a little bit better. Oftentimes those people are the ones who refer us the most business. So we want your best interest and that's how we're going to work. If you have questions, just call us or DM us shopping rates and we'll be happy to start the conversation.